Well, viewers, good afternoon and thanks for tuning in to Countdown. My name is Neeraj Shah and the markets are doing, the next 1 hour and 20 odd minutes will take you through all that's happening at close for our markets. We're doing reasonably okay, about 0.5% higher for the Nifty 50. The mid caps and the small caps too, quite unlike what happened in trade yesterday, are trading with some bit of gains, so that's actually a good sign. Remember, they came off quite rapidly in trade yesterday, even though the market breadth was in favor of the advances. The indices came off. In today's session, no such signs, so doing okay. The Nifty Bank about 1/3% higher. That's not doing too badly either. Could have done slightly better, but compared to the Nifty and the Sensex, it's off a bit, but still about 1/3% in the green. Bring up the heat map and let's see what's moving and what's not. There's a fair bit of green at the start of the trading day and it stayed like that. Firstly, the losers, I typically start off with that. Bharti, Hindalco, Tata Steel amongst the others, which is continuing to grind lower. Remember that whole ThyssenKrupp news that broke out at about 3 p.m. yesterday, and we were doing a piece on that. It was down 2% yesterday, another 1.5% today. Some weakness for Eicher and Coal India as well amongst stocks. So that's the set of losers. What about the gainers? It's pharma all the way. Lupin, Dr. Reddy's. There's some big strength there in Sun Pharma, which is up about 1% as well. It's good going. HUL has done remarkably well today. TCS, the big boy, about a couple of percentage points higher. Bajaj Finance continues to rise and shine. So the set of heavies which are doing rather well for themselves, being supported by pharma, which is leading to this. I must say though, if you pull up the index contributors, you won't see too many pharma names out there. The weightages aren't the best for the pharma names, but if the index contributors come up on the screen, you will see, look at the gaining side. Not a single pharma name, despite the likes of Lupin, etc., having a 5% gain because the weightage is just so low. But Reliance, TCS, HUL, as I said, the heavies participating, which is actually a very, very good sign. Just very quickly, couple of pockets which are doing well. I was harping a lot about pharma and what's happening there. The healthcare stocks, by and large, seem to be doing reasonably okay. So look at the non-index names as well. Glenmark, Divi's, Ajanta Pharma, the entire set of that gamut of stocks in mid-cap pharma is surging in trade, which is actually a rather healthy sign for that sector. At some point of time tomorrow, we'll talk about what's leading to this. And the list of losers include the gas-related stocks. Price hikes yesterday, but that's failing to bring in sustained enthusiasm for some of these names. However, this is the sum and substance of what's happened. What about the more liquid universe, Navneet? How is the F&O market looking like?
Well, it's looking good, Neeraj. At least the India Volatility Index has collapsed almost 5% in today's session, which is a positive sign. Let's just pull up India VIX first. Then we'll talk about the futures. India VIX is currently trading around the level of 12.5. If you look at the Nifty futures, remember yesterday's discount was nearly 1 to 2 points, but the Nifty futures today, the discount has widened to almost 14 to 15 points. So what you're seeing on your screen, open interest has definitely gone up by 5% after 4% increase that was seen in yesterday's session. Fresh longs are being indicated, but just a word of caution, the futures continue to trade at a discount. Let's just pull up Bank Nifty, which is underperforming Nifty actually in today's session. I guess the heavyweight ICICI Bank, that's the one which is trading in the red, but no major cuts seen there. The premium on the Bank Nifty futures too has come down from that 20 points or 22 points which one saw in yesterday's session 10% higher in terms of open interest addition. Let's tell you the active strikes then. For Nifty, 10,900 as well as the 11,000 call strike. They've seen some bit of open interest addition so far. Almost between 2.5 to 3.5 lakh shares have been added for both these strikes. Remember, 11,000 call is sitting with maximum open interest, so that's the upside range that one can watch out for the June series. But look at the 10,800 strike. That's the one which is active. Remember, we've taken out that level. We've also crossed yesterday's high of 10,850. Index did touch the mark of 10,855 today. So 9.5 lakh shares being written there. That's a positive sign. Put writers are active, which is telling you Nifty PCR has gone up once again after surging in yesterday's session. And it's not just 10,800. Even the 10,700 put strike as we speak has added over 8 lakh shares. So the range, if you go by the premium on the 10,800 strike, is between 10,700 to about 10,900, at least in the near term. Quickly, couple of stock futures from the pharma space. I have to take one pharma stock today. Lupin, which is a Nifty constituent, has gone up on high cash volume, so watch out for the delivery data there. Fresh long positions have been seen for this one. If you look at the June futures of Lupin, 9% higher with regard to open interest. Two IT stocks I want to mention, Tata Elxsi as well as NIIT Tech. Remember, these are the two securities where maximum open interest addition has been seen today. Out of these two, Tata Elxsi has touched its fresh highs in today's session, and also also very important, they've gone up on very high volumes on the cash side, both these stocks. So watch out for the delivery data. They're looking at 42% higher when it comes to the open interest edition for June futures of Tata Elxsi, and similar is the scene with the NIT, 24% higher, though NIT futures are slightly trading at a discount. Fresh long positions have been seen at every level for these two IT counters, Neeraj.
Well, let's wait and watch what happens to these names. But it's Tuesday, that time of the week wherein our research team gets together the list of newsmakers, the market movers, and what are the stocks that you should watch out for. Agam, Nikki and Jayesh are joining us today with a set of stocks and some interesting unique characteristics about each of these. Agam, let's start off with you today because with the large cap, D-Marts or Avenue Supermart. Well, it's nudged now that 1 lakh crore mark 2 or 3 times. It hopefully will end on a closing basis above the 1 lakh crore mark as well. But the question mark is, take us through the journey from the listing date till now, and what all peers have the shadows paled in comparison to Avenue Supermarts.
Right, Neeraj, I was running a comparison. There are plenty of stocks out there in the Nifty as well as stocks outside the Nifty which have been doing well, not as well as Avenue Supermarts. So let me just start off with the way we have seen market capitalization move from, well, at the issue price of around 299, that's where the market cap was less than 20,000 crores, and from there it's moved up much higher to around, well, 40,000 crores on the day of its listing at around 600 odd rupees per share. And of course, at the end of the day, right now it's currently at around, well, 1,600 rupees per share, and so the market cap is now at around lakh crore rupees. In terms of some of the Nifty counters, it's already in terms of market capitalization taken over the likes of Tata Motors. We have seen it take over Vedanta, BPCL, Bajaj Auto, as well as the Hero MotoCorp. So its current market capitalization is much higher than a whole host of these Nifty listed companies. Even outside the Nifty, that is the non-index heavyweights, it has a higher market capitalization when you compare it to something like a Godrej Consumer, Britannia, or for that matter, something like a Nestle. So a whole host of these very old traditional companies which have always been listed, well, ever since we've had stock exchanges for in some of these cases. Well, the Avenue Supermarts has taken over some of these stocks. Moving on, let's take a look at some of your key metrics in terms of valuation. So price to earnings, as we all know, yes, it is very expensive. According to the Bloomberg consensus, it's showing a 95 times price to earnings ratio for FY19, at 73 times for FY20. And we also know that this is largely on account of the scarcity premium that the market is ready to assign Avenue Supermarts even at these levels. EV to EBITDA, again, a substantially high, 56 times and 44 times for FY19 and FY20 respectively. But we all know that when it comes to return on equities, well, the ratios are good, of course, no doubt, they're healthy, but they're not as high as some of the other companies that we've seen in the markets at these valuations. That said, moving on, what is it that's working for Avenue Supermarts? Well, first and foremost, perhaps it will be the procurement at competitive prices, and that's how it passes on value to a lot of its customers. To take a view of some of the other factors that are also playing out is operational efficiency and distribution. And we all know that that's where Avenue's strength lies. And we have cluster-based model, and that's where, again, in terms of distribution, it's very careful about its store expansion, does a lot of due diligence, and it doesn't hurt Avenue Supermarts that it actually owns a lot of its stores, in fact relatively higher in comparison to several of its other peers as well. That said, there are just maybe two factors that may hurt Avenue Supermarts. First, of course, is the valuations, as I've spoken about earlier as well. Some analysts are now starting to question valuations and whether or not it is a good price to move into, or where could we see some profit taking. And of course, let's not forget, it's a pure, brick and mortar business model for now. We know that they are experimenting with the e-commerce space, but we really don't know how that's going to turn out, because well, almost everyone is experimenting with the e-commerce space, and this is something that should we see a large chunk of investments go through and they not come about with their returns, it could affect their return on equity and return on investment in general, and that is something we need to watch out for. But for now, at lakh crore in terms of market capitalization at around 1,600 rupees per share.
Thanks a ton, Agam, for that piece on Avenue Supermarts. It's been a great journey after it listed on 21st March last year. Well, let's move on from Avenue Supermarts to Usha Martin, which is looking to sell its steel business in order to deleverage its balance sheet. And we've got Nikki Mirchandani standing by with more details on that. Nikki, over to you.
Thanks, Navneet. Well, Usha Martin shares have risen as much as 11.5% to the highest level that we've seen since March 2015, after the board of directors in an exchange put out that the company is mulling to sell, explore the options of selling its steel business. Now, it's also going to be holding, this is in order to achieve the objective of deleveraging. It's also going to be appointing banks, consultants and advisors to evaluate the process. The board of directors in its meeting held June 11th actually decided the same. Also, if you look at the steel business revenue contribution, that's actually come down from 2017, 78% to 73% of your overall company's revenue in terms of consolidated basis. Also, if you look at PBIT, the contribution overall has come down from 34 to 29%. So clearly we are seeing some kind of decline coming in terms of the overall contribution from the steel business. However, if you look at the balance sheet situation of the company, for which the company is exploring the option of deleveraging, you look at the total borrowing, that figure is almost consistent around 3,700 odd crore, both in 2017 as well as 18, while the cash and cash equivalents remain around that 50 odd crore range. Also, additionally, newspapers suggest, a business line paper has suggested that Tata Steel has put in an aggressive bid of as much as 6,000 odd crore for Usha Martin steel business. Vedanta was also said to be in the fray of this particular acquisition. However, the company in an exchange notification clarified that the factual amount that the papers have actually given out is incorrect. Just to give you a basic rundown of what Usha Martin is the largest wire rope company manufacturer that we're talking about, a leading specialty manufacturer, and has its plant in Jamshedpur. 1 million ton capacity is what the company is currently having, and this capacity, particularly steel, caters to automotive, railways and defense sector.
Okay, thanks a lot, Nikki, for bringing all that update on Usha Martin, which is looking to deleverage its balance sheet by selling off its steel business. Finally, we've got Jayesh on Bloomberg Edge. Jayesh, which is the stock and the pattern that you're tracking?
So, Navneet, it's Steel Authority, or SAIL as we popularly know. Now, what has happened to the stock is last week we saw a 16% up move for the stock, and on a weekly basis it has in fact turned positive. Yesterday too it went up about 2 to 3%, and today it has followed up with another 3 to 4% gain for itself. Now, what has happened in the recent past is, you can see last 6-month chart over here. The center panel over here shows you the MACD line, which is the moving average convergence divergence. What it has done is, about 5 or 6 days back, it had turned positive. The crossover was there, and both those lines crossed above the zero median line, which indicated a buy signal. Along with it, what happened, if you see the bottom panel, that's the volume indication, you can see that it was trading flat, and post the month of May, in June, the volume has in fact spiked up. So there is a double bottom in play over here, because in middle of May we had about 70 odd level clocked for itself, and the better part of Feb and March was also the stock also consolidated in that range. So this is a potential double bottom from where it has in fact bounced off, the MACD turning positive on high volume. What it has also done is, if we can go to the other chart, there's an interesting pattern formation, very similar to what a few days back we did on Tata Motors, which is the W formation. Now, if you look at the W formation is here, from Feb we declined to about 70 odd levels, retraced back to about 80, and then once again the 70 was in play, and now we have crossed back. and there is a cycle factor which is also playing out. So this semicircle that you see, this is about 23 days. So now the decline has taken 23 days. This intermediate top has taken another 23 days. Once again we saw a dip for about 23 days, and the next 23 days that actually occurs on the 27th of June. And if this W pattern is to complete itself, we could see prices around 98 rupees by the end of 27 June close.
Let's wait and watch if that happens indeed or not. Mind you, standard recommendation. This isn't a recommendation, more a pattern that the Bloomberg terminal is throwing up, and some of the chartists have spoken about to Bloomberg Quinn. So keep that at the back of your mind, and please consult your financial advisor if you go out and take a trade. It's that time of the show when we typically get trades going, but we have a management waiting by, and that's Lemon Tree Hotels. A lot of people writing about how the cycle seems to have turned for the hotel companies. They have received a construction nod for a hotel near the Mumbai International Airport as well. How will that benefit the financials? What's the year ahead looking like? Let's get in the management. Mr. Patu Keswani, the CMD of the company, joins us right now on the show. Good having you. Thank you so much for taking the time out, and I really appreciate you being patient with us while a couple of pieces which we had to do earlier were going ahead. Can you tell us, you've now, post your IPO notwithstanding, you've seen these cycles for a number of times. Is this time around, is there a definitive cycle change that you believe the industry at large is undergoing, and can it last? Is it a structurally up cycle that the hotel industry has entered in 6 months ago, and can it last for the foreseeable future? What are your thoughts?
Well, I've seen, I think, 4 cycles. The latest one, which we are in the middle of, has been, I think, the most prolonged bottom cycle or down cycle that I have seen, and that's because in 2003, 4, 5, 6, demand picked up so strongly and supply was, so short that each hotel that I know of was making 30 to 40% ROCEs. So a lot of supply was planned. Supply in India grew 5x, and we are still working through that supply absorption. Going forward, what is clear is that demand in the last 5 years has grown at over 13% a year. And supply going forward is only going to grow at 6 to 7. So obviously the cycle is going to reverse. The reason is twofold. One is, of course, that nobody is building hotels anymore because of the poor economics at present. And the second is the huge shift by the average Indian middle-class consumer who used to earlier stay with friends and family or in guest houses. These are typically young Indians below the age of 40, middle class, with rising disposable income, and their aspirational shift towards branded mid-market hotels is getting very evident. So there is some correlation, I guess, with also what's happening in the airline sector in this case.
Interesting. And would you believe that, one, the natural demand-supply tailwind will benefit even more to brands which have, for lack of a better word, a presence of a chain to them, as opposed to sporadic individual hotels that might be there in a city or two, or maybe in very select clusters, but not across many clusters? Is that a natural benefit to players such as you as well? You and some of the others which have that chain presence.
Well, naturally, when you have a chain presence, you are de-risked geographically. You are also more widely known. So yes, the short answer is that it will benefit chains. We also have access to better sourcing capability, better contractual agreements with companies, because we can offer accommodation options across India. We also have better relationships, therefore, or more deep relationships with other distributors like online travel agents and so on. So on an average, I would, if I just, short off the hip, I would say there should be a 5 to 10% or 500 to 1,000 BPS difference in performance between a chain and a standalone hotel.
The reason I asked you that question, Mr. Keswani, was that one of the reports...
In terms of revenue.
Okay. No, sorry. The reason I asked you this question was one of the reports was saying that chains in India have only a 5% market share. Now, I wanted to know if you believe that there could be a market share shift in this fashion, that companies which are chains will take away market share from companies or hotels which are not chains. I mean, I understand the unorganized to organized within various buckets, but can there be a shift from non-chain hotels to chain hotels, and will chain hotels occupy a higher market share going ahead? Do you see the industry like that?
I see it very certainly like that. In fact, I see that over the, well, in the past 3 to 4 years, and certainly in the next 5 to 10 years, there will clearly be consolidation. By consolidation, I don't mean ownership consolidation of assets, of hotel assets. I see consolidation by brands. So today, by the way, it's not a 5% figure. If you look at the last HTL report on the industry, it was that out of 200,000 hotel rooms in India, about 62% are branded or chain hotels. If you are including the guest houses, which are semi-legal, many of them, or operate under conditions where they don't have fire safety, approvals, they serve food when they are not meant to, then sure, there might be another 500,000 to 1 million more rooms in India, but nobody has these numbers, accurately. The advantage of a chain is very simple. You are able to synergize, you are able to network, you are able to offer customers more choice. So over time, what will happen is two things. One will be the standalone hotels will be under pressure to become part of chains because of the chain's ability to not only distribute their rooms better, but also to lower their costs because of better relationships. The second issue is that over time, the smaller chains or the weaker chains who are unable to get customer stickiness, like the stronger brands, so I shouldn't say the word chain, I should say brand, the stronger brands will start attracting owners away from the weaker brands. So long term, two things will happen, and by long term I mean the next 5 to 7 years. One is that there will be more and more asset owners who will demonstrate a desire to move towards chains that give better results to them, and that is natural. And it's a virtuous cycle. The chain that does better will attract more customers and therefore continue to do better. So my broad view is that in the next 5 years, there will be maybe 4 or 5 or 6 dominant chains in India. Some international, some domestic, depending on the level of customer they are targeting. So if you are targeting international customers, then international chains have a natural advantage. When you target the value for money Indian customer who wants lean operations and wants a local loyalty program, then I guess it's a more equal battle.
Hi, Mr. Keswani. Good afternoon to you. Well, we've discussed the broader trends of the sector. Let's now talk about your company. There was a recent development that you've got the pre-construction nod. That's the approval you've got to build a hotel near Mumbai International Airport. If you could talk more about that, when does it become operational, and what sort of ARR are you looking around that area, since there are already a lot of hotels situated around the Mumbai International Airport?
Well, let me give you some background quickly on Bombay. Bombay is the most demand-dense market in India, and the reason for that is very simple. Besides the fact that it is the economic capital of India, it also has the highest barriers to entry in terms of costs, because cost of land is very high. And the second reason is that the development approval process there is a nightmare. So to just put it in perspective, my first hotel there, which I'm opening in the next 6 months, in Bombay, which is also very close to this hotel you are referring to, is for 300 rooms. It took me 9 years to develop it, which is a record of for us, because we normally take 3 years. This second hotel you are talking about is located, it's a property, it's a plot of land owned by the Mumbai International Airport. We acquired it in 2015 for a couple of 100 crores. We have been going through this approval process. We have got, I think we got about 60 or 80 approvals. The last approval was given to us about a couple of weeks back, and we have now started construction there. It is a 577 room hotel. It's a Lemon Tree Premier. We have commercial space in it, so we will likely, and we are considering it right now, convert that to rooms also. If that happens, then it will be a 671 room hotel, which is incidentally going to be the largest hotel in India. It has about 800,000 square feet of built up space. This hotel, my expectation is, will be ready in the next 3.5 years at the latest. As far as average rates go, well, I would estimate it should be about 8,000 rupees when we open it, and we should do at least 80% occupancy there.
8,000 is the average room rate that you're looking to garner from this new hotel, which will be opened in the next 3.5 years, as highlighted by you. Mr. Keswani, just one more question from my end. How are the occupancy rates currently? Because this is a seasonally strong quarter because of the summer season. If you could tell us, what were the occupancy rates in the month of April and June as compared to last year? Was it better?
Our occupancy rate, fortunately for us, remains fairly predictable and stable. So our group occupancy rate for the 50 hotels that we operate across India today is about 76 to 77%. And it has been that whether it is winter or summer, by and large. What changes is the price, because in winter there is a much more diverse mix of visitors, of guests, and our ability to reprice is normally higher in winter than in summer.
Okay, how do you plan to fund the new hotels that you're looking to start in FY19? We've already discussed Mumbai, the other ones Pune and Dehradun.
Well, they are fully funded.
Okay.
The balance funding required is only about 200 crores. And we reckon that we'll be able to fund it mostly through internal accruals and a little bit by debt. Our current debt is 1,000 crores. And as I said, we have 5,000 operating rooms, and we are opening another 1,600 rooms this year. So this, we don't see our debt going up significantly this year. In fact, the debt that we add on will be for the new Bombay hotel. So in summary, we will have 6,600 rooms and 66 hotels by the end of this financial year. Broadly, there might be a delay of a month here and there for some hotel. We are going to open a 300-room hotel, which is owned by us in Bombay, a 200-room hotel owned by us in Pune, a 90-room hotel owned by us in Dehradun, a 140-room hotel owned by us in Calcutta, and another 140-room hotel owned by us in Udaipur. So these are the owned assets. We will also open another 700 managed rooms this year. So as I said, the debt required here is very marginal to our current debt. Bombay, however, will require a significant investment of about 800 crores. We have, on a very conservative basis, we feel we can fund most of it. Since we've already funded 200 crores of that, we will fund most of the balance with internal accruals and take a little more debt. So our peak debt, if you look at all the projects that we currently have, will go up to about 1,300 crores. And our expectation is that we will be very, very comfortably able to service it.
Somebody likes the conversations. The stock now up about 9% in the session. One last question that I have. This seasonal as it may be, Mr. Keswani, but are ARRs higher currently in this holiday season? Can you give us some color there?
Well, they're higher than last year, yes.
Any numbers that you could share with us, if at all?
But I can't give you more color. No, that is not. I think that you will have to unfortunately wait for.
Okay, maybe we'll talk to you post your earnings. This is really good. It was really good chatting with you. Thank you so much. And I can sense there are exciting times for your business. So wish you all the best for that.
Thank you.
That's Lemon Tree clearly saying no more color. Okay, interesting. 9% higher though for the stock. You know, before we go to our technical experts, Avinash Gorakshekhar is with us. Maybe let's just take a question with him. Avinash, the hotel companies had a fair spurt about 3 months ago, thereabout, or 6 months ago, then have been through a bit of a lull. Lemon Tree itself, the listing and post-listing was dramatically different. What's your sense now on the hotel stocks? Do you track Lemon Tree individually?
No, I think clearly, the IPO was not much of a kind of a big pop-up IPO. But yes, I think, most of the FIs have become positive on the stock. And I think looking at the kind of budget hotels they run, Neeraj, my sense is over the next, say, 18 to 24 months, you're going to see a very strong growth in the middle segment, where probably ARRs have actually moved up by about 12 to 13%. So I think he's right. In fact, the point is that ARRs have actually improved quite significantly. And I think the trend would definitely continue, continue, considering the fact that supply shortages are going to emerge, and I think there's a lot of middle class consumption driven demand which is now moving into these kind of hotels. So Lemon Tree should do well. I think the other company to look out is Royal Orchid, again a very prominent player within Bangalore, and has almost 50 to 60 properties under its belt. Again a low asset kind of model. So here also I think clearly the markets are betting on companies where the return on capital and the return on equity is much better, because the capital intensity in this business, Neeraj, is pretty large. I think in case of Lemon Tree, the kind of investments he mentioned, I think could possibly the stock could possibly get a forward trajectory depending on how the funding would happen, because 800 odd crores for the Mumbai property seems to be a pretty large number.
Yep, that's what he mentioned. Average room rate, he's expecting 8,000 for the Mumbai property. Well, it's 14% owned by the FIs. Mutual funds have almost 8% stake in this company. So good going, at least in today's session for Lemon Tree. But let's move on and get some technical view going on the markets as we are approaching once again the mark of 10,850 on Nifty. Sachtan Nanutekar, Deputy Vice President for Technicals for Equity at Trade Bulls, joins us on the show. And also joining us is Ruchit Jain, Technical Analyst at Angel Broking. Good afternoon to both of you, and thanks a ton for joining us once again on this show of Bloomberg Quint. Sachtan, let me come to you. We've touched yesterday's highs of 10,850. What next from here? Every technical analyst has been talking about the resistance level of 10,900. Can we see that, or you expect some bit of consolidation before that?
Well, good afternoon. In fact, I'll just take the discussion back to last week when we were, trading somewhere close to 10,560, 550 zone, and we were of the opinion that the market should, form a firm bottom and move ahead higher towards 10,770. So if you look at the opening that we saw for this particular week, the markets opened very much comfortable above that level of 10,770. But on a closing basis, the way it retraced back, it has just given some jitters about the momentum part of it. So it is very essential that the market should close about yesterday's swing high, which was formed at around 10,850. So probably when we talk about momentum, I think it will be better to trade momentum once the Nifty again gives a close about 10,855, and then probably the trajectory would be quite open till 10,940. On a trend basis, I think there is no problem. I think the market is in a very firm uptrend, and it is just a question of momentum. So in case if the market fails to sustain about 10,850 on a closing basis, and if it starts slipping below 10,770, then probably we may see a correction in the near term. But as of now, I think the way the stocks are participating and the way Nifty has again recouped itself from today's low, 10,855 is the level that I would be watching out. And in case if the Nifty surpasses that, then probably the extension could be towards 10,940 very soon.
Okay, let's see whether we reach that mark of 10,900 anytime this week or not. But Richard, what is your call on Nifty and Bank Nifty?
Yeah, hi, very good afternoon. Yes, if we see the Nifty, then on the lower time frame charts, the higher top, higher bottom structure is in place. And at the start of the series, we were talking about the support of 10,550, 10,600 range. Well, probably with the passage of time, the supports have been shifting higher. 10,700 then became a support, and now 10,770, which on the intraday charts is the recent swing low, now has become the new support. So I think the supports are shifting higher, so this is a positive sign. Secondly, the up move which we have seen in last couple of trading session, there is a broad market participation in this up move. Yes, there have been some pockets which have shown outperformance, such as pharma and specific IT names, but I think overall the mid cap space is also quite participating in this up move. So that is a positive sign. So one should definitely remain with the trend. The May high of 10,920, 930 range, I think that should be tested in this week itself. So at current levels, the view should be on the positive side. Existing long positions can be protected with stop below 10,770 for a target around 10,920.
Okay, what about specific stocks? Richard, let me come to you first.
Yeah, since we spoke about IT, though, I have my first buy recommendation in IT, which is Tata Elxsi. Today we have seen a breakout from a consolidation phase. While no doubt that the broader trend continues to remain positive, we have been speaking about the stock since last 3-4 months, how the high top, high bottom structure has been in place. Now, after a consolidation today, again the up move has been supported by good volumes, which indicates that even at all-time highs, the stock is attracting good buying interest. So one should take advantage of this at current levels. Also, it's a good buy with stock below 1227, expecting target around 1340 in short term. And my second pick is a buy call in Torrent Power. Well, probably even this stock recently has shown an up move, and after a decent up move with good volumes, the prices have retraced up to 38.2% retracement support. Again, today it seems that the uptrend has resumed with good volume, so one can go long. The risk reward ratio here is about 1:1.5, so one needs to adjust their positions accordingly. One can go long with stock below 243, expecting target around 295.
Okay, Sachtanand, what about you? Individual trading ideas?
Well, I have two recommendations, one on the long side and one on the short side, since market is in this particular range right now. So if you look at on the positive side, I think Indigo is very well placed for the next up move. So if you look at the overall formation, Indigo saw relentless selling from the levels of 1500, and it got stabilized somewhere close to 1050, 1100 mark. Near that particular level itself, we saw a double bottom formation and a fresh impulse which initiated early in the later part of May series. So if you look at the formation right now, there are a couple of doji formations near the 61.8% retracement of that prior impulse, which is indicating that there's a fresh up move which is impending. So we are expecting that the stock could move towards say 1280 levels. A stop loss can be placed around 1165 and long positions can be initiated. On the short side, we have Tata Steel, which has been an underperformer, and if you look at the overall setup, 600 has been a barrier for the stock. It also coincides with its 200-day exponential moving average, and that's why we are expecting that the drag could further extend towards 575 levels. So 575, 558 levels. So that's why short positions can be initiated in Tata Steel. At this juncture, a stop loss can be placed somewhere close to 591.30 with an expectation of a move towards say 558.
Okay. Avinash, were you a proponent of buying any of the pharma names? And if so, there's been a bit of a rally that has happened already.
Yeah.
What does somebody who, I wouldn't say miss out because you don't quite know what will happen over the next 12 months, but what does somebody who hasn't participated in the rally up till now do? Should he brace himself for more upsides and therefore selectively start researching some of the pharma names and buy them, or wait for a pullback? What do you think will happen? What pharma company do you like if you do?
I think the kind of valuations pharma companies have thrown up, something like a Lupin or maybe a Cadila Healthcare. I think these are companies which we have been recommending to our clients, and I think Lupin has shown a strong bounce following a very strong kind of news flows from Sun Pharma. But typically, I would say that Lupin still looks quite attractive. If one were to look at the next, say, 18 to 24 months, I think clearly Lupin had a very disastrous fall from the peak, and even going forward, at least maybe for a quarter or two, margins may come under pressure. But if you look at the longer term business model, I would believe that anything around 820, 830 for Lupin and the current level for Cadila could possibly be a good portfolio choice, provided the time horizon Neeraj is at least over the next, say, 18 to 24 months. So these are stocks which probably may not give a very strong earnings kind of trajectory in the near term, but beyond FY20, I think definitely you could see a strong bounce back in earnings.
That sector overall, Avinash, do you think has bottomed out, and now the rally which has started, because earlier also we've seen few days pharma stocks going up, then the rally fizzles out. Is it bottomed out completely?
I think clearly, Navneet, it's difficult to say whether the rally has bottomed out across the sector, because I think even as of now, there have been some companies which have actually not delivered. They have continuously have regulatory issues. So I would believe that, I think it's better to stick to companies where the price erosion has actually factored most of the damage, and mostly companies, which have got a clean track record as far as US regulatory, norms are concerned. So I think it's probably better to wait and watch on a stock specific basis as of now. I would believe that maybe 1 or 2 quarters going beyond that, possibly one could get a sense as to how the pricing in the US market could emerge. I think even as of now, most of the companies who supply to the US markets have been sounding that margins, could come under pressure.
Interesting. Avinash, I was looking at the list of stocks which are clinging on to new highs or climbing them every single day. Today, of course, the consumer names like HUL and Godrej Consumer are right up there. Okay, let me first get that thought, then I'll get a thought on Firstsource. HUL, Godrej Consumer, Britannia, are you buying them?
I think, most of these names were pricey earlier and even as of now seem to be quite pricey, but I think looking at the kind of earnings visibility, if you see a Britannia very strong volume numbers post the GST and the D-Mart kind of effect, HUL also trades at more than 50 times multiple. I would believe that I think if somebody wants to get into these companies, typically one has to keep a time horizon of at least 2 to 3 years, because valuations are not very cheap. Earnings growth could be possibly be in regions of say 15-16%. So I think if at all one were to look at the FMCG basket, something like a Marico or maybe a Dabur would possibly figure out better, I think, in terms of the risk reward.
That's what I was trying to ask. Isn't the cornerstone of any successful investment the price that you pay?
Yeah.
And at 55 times for HUL, or maybe more than 55 times, are you paying a good price?
No, in fact, Neeraj, 55 times is definitely not cheap. So I think relative to that, if one were to play the FMCG theme, I think something like a Marico or a Dabur, these are stocks which probably would also benefit from a stronger monsoon. Dabur has actually realigned its product mix quite strongly, post the Patanjali issue. So I think you're going to see a lot of traction from these mid-size FMCG players. So maybe a Dabur or a Marico could possibly be looked upon, and I think here valuations relative to lever are definitely slightly more attractive compared to lever.
Navneet Saluja, does the FMCG analyst within you come up and say something?
No, he's right actually, and plus if you look at the earnings of Marico, they've been underperforming compared to the other sector, and the reason was I think the higher copra prices which have started to cool off now, and that's the bet I think a lot of the analysts are taking within the FMCG space. And as he rightly highlighted, if you've got HUL trading at 50 times, I was looking at Dabur's PE for FY20, it's 37 times, so relatively these are cheaper stocks, Marico and Dabur, to bet on definitely. Okay, but Avinash, what is your top pick for the day?
No, I think, Navneet, it's not a top pick for the day, but I think it's a recycling play called Ganesha Ecosphere. Now, this is an interesting company considering the fact that now we keep hearing about plastic ban and typically, the Clean India kind of initiative the government has taken. This company actually makes recycled polyester staple fiber, and it's one of the key players in the Indian markets, controlling about 25 to 30% market share. Interestingly, they started off in 1987, and as of date, the compounded growth in top line has been about 15-16% odd. Last year, they posted a top line of close to about 800 odd crores, EBITDA of around 90 odd crores, so roughly about 12-13% EBITDA margins, and a bottom line of 35 crores. Now, what is interesting is the raw material prices compared to the crude oil prices, the virgin fiber and the recycled fiber, the pricing difference normally is about 15 odd %, and the management is pretty hopeful that despite the fact that even if crude prices go up, the margin of benefit for the recycled fiber makers would definitely stand by. And recently the company actually made 100 crore QIP at a price of around 377, so it's below the QIP price. This money is going to basically be used to actually ramp up their capacity by around 50-60%, and also to reduce the working capital cost. So I think clearly they pay about 15 odd crores every year as interest cost, so obviously this could also benefit and drill down on the numbers going forward. Our sense is that we could see an earnings of around 24 to 25 rupees for FY19 and probably 30 odd rupees for FY20. This company has started generating some institutional interest, some funds have started moving in, but typically these kind of recycled kind of plays would obviously gather momentum as the government is now very keen to get the environmental right, and most probably the kind of applications this product has got, definitely I think one could definitely look at it. Trades at a multiple of roughly about 13-14 times FY20.
Ooh, big stakes held by SBI Mutual Fund 7%. You've got DSP BlackRock also holding 6% stake. So what's the time horizon you mentioned?
I think over the next say 12 to 15 months, we are looking at FY20 earnings of around 30 odd rupees. This year they did a EPS of around 18 odd rupees.
And was QIP the reason that the promoter shareholding has fallen from the March quarter? I don't know.
I don't know, but I think the QIP was done at around 377, roughly about 26 lakh shares were issued.
Okay, because as in March, I guess the promoter holding was 45, and as on 11th May on BSE it shows some 39.8.
Yeah, so I mean probably that could be the reason, but I think clearly some more institutional investors and some large investors have also come in via the QIP issue.
Okay, so that's the fundamental call on Ganesha Ecosphere. That's a company, Neeraj, with market cap of 750 crores.
Well, interesting. Let's wait and watch what happens on this one. Avinash, if you don't mind, just stay on. We'll probably take a couple of other questions as well. Before we take that break, maybe just a question each to our technical experts as well. Sudden surge in NRB bearings. That stock is up about 12.5% and hits fresh highs. Today, look at that sharp move there in NRB bearings, 12% higher, 1.5 million shares traded. Good going there. And continuous uptick in First Source. That stock is up about 4.5% as well. Quick thoughts here, Ruchit. NRB bearings or First Source, do you track either of them?
Well, Neeraj, NRB bearing I even hold in my personal portfolio, so that's a disclosure first. Yes, the stock today has given a breakout from its resistance of 182. So I think the trend after a consolidation phase, now again the prices have resumed the uptrend. Usually when stock comes at all-time high levels, we take out reciprocal retracements, and accordingly, I think if one has a very short-term perspective, then the stock could do levels around 230 in very near term. So the outlook is positive for this stock, and even First Source Solutions since last few months continuously have been moving higher. The thing is that if anyone is holding the stock, the best strategy to ride this trend is to keep a trailing stop loss and keep holding the stock. Now the support for the stock is now around 76-75 rupees. So any existing long positions should be continued to held with a revised stop loss of 75.
Okay. We need to slip into a break. On the other side though, I would want to get a view from Sachidanand on some of the FMCG names, so we'll do that and then some more. But stay tuned, we'll be back in just moments from now, get you the Fab 4 stocks of the day, the chart of the day, as well as some dealing room checks with our experts and their closing strategies from both Sachidanand as well as Ruchit Jain. Stay tuned.
Welcome back. You're still watching Countdown with us on Bloomberg Quinn. Just want to highlight a few stocks which have just gone up. A couple of these PSUs from the likes of STC India, Dredging Corp, as well as stocks like MMTC. All three of them have seen a sharp surge just in the last 15 to 20 minutes of trade. As you can see, STC is up 12%, MMTC also going up in trade, sitting with gains of 13%, and you've also got something like Dredging Corporation that's also seen a sudden surge of nearly 11%. We'll get you views going on this one. Avinash, any thoughts on these PSU stocks?
No, I think clearly, most of these stocks normally move up on some sort of events. I would believe that, now we have the IPO offering from RITES. So I think before that, possibly some action coming in most of these companies. And I think probably the markets would be assuming that, some more IPOs from these state companies could possibly come in. But definitely, I think this is probably a, event before the IPO. So probably you could see a lot of action, of most of these comparable kind of public sector companies.
Okay, we'll wait and watch whether there is any sort of development which takes place. Now, Avinash, we'll leave it at that note. Thanks a lot for joining us and taking us through your thoughts on markets. But it's time for us to get you the Fab 4 stocks of the day, and to take us through the same, Yash Upadhyay joins us. Hi, Yash. Good afternoon.
Good afternoon, Navneet. So first up, a big order win for BGR Energies. That one has surged more than 10% today after the company said that it has won multiple orders worth close to 431 crore rupees from the Nuclear Power Corporation of India. The contract would be executed over a period of 60 months, that is about 5 years. DCM Shriram is up close to 11% today. It hasn't had a great last 1 month. In fact, it's down close to 22% in that period. Not the most inspiring of results. Their net profit for the fourth quarter was down 68%. But this big up move today comes after the company said that it would consider the proposal of a share buyback at its board meet later in the week. Strides Sashun had gained close to 4% today after the company said that it has received the US FDA approval for a new drug used in the treatment of influenza. And now the new drug has an estimated market size of close to $725 million in the United States. And with this, their overall ANDA approvals stand at 75, of which 48 are approved and 27 are pending. Finally, we're also looking at Tata Elxsi. It's up 4% today. On a year-to-date basis, the stock has run up as much as 30%. Today, it hit a fresh lifetime high of 1,279 with volumes of well over 3 times the 20-day average. Back to you.
We'll watch out for some of these names. Thanks a lot for that, Yash. A fair bit of stocks which have gained. Some stocks have come off as well. But we'll talk about all of those. Before we do that, we are certainly caught up with the football mania, and with the World Cup just a couple of days away. How will a weak ruble allow you to make that trip? Here's Shraddha Babla with our chart of the day. Well, this promises to be interesting, Shraddha. What do you have for us?
Especially for you, Neeraj.
Well, irrespective, for 20,000 fans who are going out there. Shraddha, what do you have for us?
So, well, the Football World Cup 2018 may just be a good chance for a lot of people to watch the world's biggest sporting event live from the stadium. And why do I say so? Well, it's a favorable foreign exchange rate. Now, if you look at the Russian ruble, that has depreciated by about 8.3% versus the US dollar so far this year, making it the 6th worst performing currency among the 147 currencies that are tracked by Bloomberg. And that could actually make your travel to Russia a little cheaper, at least in US dollar terms. Just to say, for the Indians, the Indian rupee has appreciated by about 3.1% against the ruble in 2018. The sad part is that the Argentinian and Brazilian currencies have weakened a lot more. This is the Argentinian currency and the Brazilian. They've depreciated a lot more against the US dollar than the Russian ruble has. So tough luck for travelers from Argentina and Brazil, which also happen to be strong contenders for the World Cup themselves. But at least for the rest, they can go and take their chances if it's not too late already. That's today's chart of the day.
Okay, Shraddha, thanks a lot. That was an interesting chart of the day, I must say. But let's move back to markets before we keep talking about the Football World Cup, which starts this week. But in terms of markets, 10,836. So we're just about holding on to the gains. That's a very positive sign. Remember, yesterday we gave up the day's high of almost 10,850. So that's one positive takeaway. Nifty is still sustaining above the mark of 10,800. In terms of individual stocks, BGR Energy, which Yash just highlighted, that's actually locked in upper circuit of 20%. And you've got Granules India, that's up 6%. That's now one of the top F&O gainers as we speak. Sachtanand, 6% higher at 84. Would you advise taking any sort of position on Granules India?
Well, if you look at the overall structure, we saw a lot of weakness when it breached below 120 levels, and the way it took a pause somewhere close to 70, it looks like that the near-term bottom for this particular stock has been made. Purely in terms of momentum, I think today's session has been very important. In fact, the stock just managed to close above its resistance area of around 82, and the way it is shaping out, I think just from a short-term perspective, one can maintain their long positions, keeping some stop loss somewhere close to 81, and the pullback may extend right up to say 90, 91 levels as well. So I think in case if someone is holding it, probably you should hold on to the stock with an expectation of an extended move towards 91, and the stop loss should be maintained at 81.
Okay, so you can hold on to your long positions on Granules India, and that's the advice coming in. Actually, we had a query on Facebook from Girish Kumar who wanted a view on Just Dial, and that's the other stock actually which is holding up in today's trading session. He's holding 3 lots at 567, that's for the June futures, and 581, that's the spot price now. Can we just pull up the futures and check where they're trading? He's pretty much in the money, 583 bought at 567. Richard, do you think he should be booking his position, or he can trail stop losses here?
I think you should continue to hold the stock, because if we see the recent up move, then it is definitely an impulsive up move, where up moves were supported by good volumes, and corrections, the volumes during corrective moves were very low. So I think this momentum should get continued for the rest of the series and and we could again see levels around 615, 620 range in next few trading sessions. So my advice here would be to continue hold this stock, keep a stop loss below 552 on cash levels.
Okay. So much to talk about on terms of charts as well, but let's continue with some fundamental talk as well. Lancelot Dikana, he's the CIO at ValueX, joins us right now on the show with his thoughts. Lancelot, good having you. Thanks much for taking the time out. There is strength today, Lancelot, in a meaningful way in some of the consumer names. HUL up about a couple of percentage points. Godrej Consumer is up as well. And then the banking names are making some strong moves. Actually, let me ask you about banking. PSU banks, the last 1 month, while people may want to shun them, they are making some moves all right. SBI is probably up 11 or 12% in the last 30 days. I've seen Corporation Bank, for example, on odd days give 9-10% moves and then continue to do that as well. That's SBI up about 12.5% too. What's happening here? 1 month, 13% for Corporation Bank. Have you contemplated selectively investing into PSU banks at all?
Well, yes, I have been, a buyer in SBI at its lows, and I still believe it still offers value because, while you can't put all the banks in the same category and say that all are good or bad. Individual banks have got significant strength, and you are seeing, with the recovery process, providing the banks with cash coming in, it means that going forward, provisioning may not be as harsh as it has been in the last 2-3 quarters. So from that perspective, there has been a relook at a lot of the PSU bank valuations, and I think in that space, SBI stands out as one of the strongest banks in the space, and it was trading at practically below its book value. So I think it offers a lot of value at this point in time. As far as the other banks are concerned, I think they have different issues and different problems. So it's very difficult to say that put them all in the same category. But I think there has been some amount of short covering and some amount of value buying that is driving them ahead. But if I had to choose a stock in the PSU banking space, it would be only SBI at this point in time.
Okay, so betting only on State Bank of India when it comes to the PSU banking lot. Stocks actually up 3% as we speak right now, trading around those levels of 282. Lancelot, besides the beaten down sector, that's PSU banking space, the other one which is not done well, at least since 2017, since the time markets have been rallying. But in the last 5 sessions, we've seen a good surge when it comes to the Nifty Pharma Index. Well, we were discussing this with our earlier guest also regarding bottoming out of the stocks as well as the sector, because it's been reeling under the pricing pressure. That's the pharma companies. Do you think, these pricing pressures have been bottomed out, and now going ahead, pharma can be a dark horse?
Well, as far as the pricing bottoming out, it's very difficult to say because that could depend on a lot of factors. But if you go back and look at the earnings and the revenue growth as well as the margins, I think we are still a quarter or two away from them completely bottoming out. So from all the results that came out and the interaction with managements, it's quite clear that, even for the next quarter and maybe the quarter thereafter, we are going to see pricing pressure in the US continue, and that's going to put pressure on margins. And in the absence of new pipeline, we are not going to see significant growth in both revenue and margins for almost all the pharma companies, except for Cipla, which is more focused on domestic and does not have a big presence overseas. I think all the other pharma companies are going to have a very difficult time as far as their earnings is concerned. So in the absence of earnings growth, if the prices are moving up, it's more on the back of a perception that they have been oversold, and maybe technically also they have been oversold, and that's why we are seeing the bounce back. But it's not driven by any fundamental change in the business outlook per se. So with that in mind, I think every rise could be a point where one can sell and look at a correction. Because unless you start seeing earnings to improve, then only you can probably say that the sector is bottomed out. But I think we are still at least 1 or 2 quarters away from that.
Yeah.
Okay. Some other stocks which are doing rather well for themselves. BGR Energy is up about 20%. Dredging Corporation about 30-odd%. There is a bounce back in HCL Info today, which is up about 13-odd% as well. Good going for that one. Tech Solutions continues to rise and shine, up another 7%. And Quest Corp is up 6.5% at 1273. Good going for this stock as well. It's 3:15. Stay on, gentlemen. All of you will just take in some more ideas from you and maybe some closing thoughts as well. But it's 3:15, so that time of the show when we get in our research heads to talk about what is it that they are learning from the dealing room sources. Yatin Mota and Darshan Mehta are here with their channel checks. Good afternoon, both of you. Yatin, let's start with you first.
Neeraj, pharma and IT, these are the two sectors which are relatively doing well in the last 1 week of trade. TCS and Lupin, these are the two stocks which are in focus. Of course, TCS ahead of the AGM on Friday is looking strong, 2 percentage points up for that one. And today also we had an announcement of the stock exchanges that one of the overseas clients has, enhanced the contract value So on the back of that news, TCS is doing well, and FIs, of course, buys in, a lot of these IT stocks. Lupin, dealers are recommending a BTSC strategy here, 5% up for that one, a significant bounce in all of the pharma stocks for that matter. So, the trend in pharma from the trading side, dealers believe is on the positive side. And finally, in the cash segment, do watch out for Eicher Motors. This is one stock wherein domestic funds are said to be sellers, and if you look at the cash volumes, almost 37,000 shares traded on this one. So Eicher is something wherein dealers are expecting some bit of weakness on the back of domestic funds selling their delivery positions. But Darshan has a few more stocks to talk about.
Yeah, so one of the stocks that's been actively spoken about is Piramal Enterprises. Again, the buzz of the potential demerger of the business have revived. I heard it among several dealing rooms. They will get back to, after the deal with selling their business to Abbott, they'll get back into the pharmaceutical market. So they and they're very strong on the financial side of the business. So a potential demerger is something that the street anticipates, and it could come in sooner than later, is what some of the HNIs are betting on. So the first one is Piramal Enterprises. Wockhardt is another counter, hasn't rallied that much in terms of what the other counters have done. But a couple of dealing rooms where I spoke to, they expect some bit of US FDA re-inspection on the Chikhalthana plant very soon. We don't have an official comment, but that's been actively spoken about. And the final stock that's been spoken about is Bata. It's flat in trade, but did manage to spike up in morning trade. One of the large foreign funds is actively accumulating. It's more of a positional buy that they're having, and over the next few days, buying will continue by this fund in Bata. So Bata is something that's been spoken about.
Okay, we'll watch about for all of these. Thanks a lot for that, Darshan. Any thoughts here, Sachitanan, on Bata?
Well, I think the stock is within a range. 800 on the higher side has been a strong resistance for the stock. On the lower side, 740, 760, is the range of support. So probably we may see it oscillating within this particular range. So really not a fresh pattern or any particular evidence that concludes to a trade setup as of now, but I think it is more range bound.
Okay, that's the view in Bata India. Can you just pull up the intraday chart of Nifty Bank? Remember, we highlighted it was underperforming, but there's been a sudden surge which has come in the last few minutes of trade. So it's back around those levels of 26,600. Pull up IndusInd Bank, pull up the intraday chart of that one. I think that's trading around the day's high level with 2.6% gains for IndusInd Bank. Ruchit, on the charts, is there any trade for IndusInd Bank?
Yeah, if you see the broader trend for this stock, no doubt remains positive, and since last few trading sessions, the consolidation phase were there. Today, that consolidation phase have been broken out, which indicates that the uptrend is likely to continue. So at current levels, one can initiate fresh longs, also keeping stop loss below 1900 and expect target around 2030, 2040.
Interesting. Any thoughts on HUL or Godrej Consumer, Sachitanan?
Well, HUL, we have been optimistic on the stock. In fact, the way it has again, broken out from range, there could be an extension right up to 1670. There are no signs of any, divergence or any overbought kind of a situation as of now. So I think there's still scope for the stock to rally further. 1670 is one level wherein one should review the position. So I think the breakout is firm. We may see an extension going forward.
Okay, HUL, I guess, has hit its fresh highs too in today's trade. 1642 is the mark. It's sitting with gains of 2.5%. Lancelot, FMCG stocks, what's the call with, most of the market participants now betting on the recovery in the rural market. The commentary from actually majority of the managements have been also positive. If somebody is sitting with HUL, valuations obviously remain a concern, but the stock's been touching fresh highs.
Yes, I think what's happening in the FMCG space is that there are a few stocks which are good stocks and have been showing good earnings growth as well as growth in volumes, and money is moving out of stocks that are not performing and into stocks that are performing. So we have seen valuations also pick up, and that is putting keeping HUL and Britannia and the others at very elevated price earnings ratios. So I would not want to actually look at buying into these stocks at this point in time, but keep an eye out, and maybe whenever there is a correction, that would be a time to invest in FMCG stocks. But clearly the growth is coming in from the FMCG space, and that is something that will continue given the structural changes that we see in the market, especially because of GST, and now with the improvement in rural demand. The volumes in rural India are picking up, and that's across the board for all the companies in that space. So I would keep a close eye on these stocks and only buy them when there's a correction.
Okay, what else? I'm just trying to look at stocks which have done well today before we get in closing strategies. Dredging Corporation is up about 13%. We spoke about it. MMTC has about a 12.5% kind of a gain. HCL Info about 11.5%. So that has done really well for themselves. Sanghi Cement about 9.5%. So that's done well. And yeah, a couple of others. So a set of names have had some really strong moves in the session today. Let's get in closing strategies before we get back to Lancelot for his recommendation. Ruchit, I'll come to you first. Your top closing strategy for the day.
I would recommend a BTST in Godrej Industries. Well, we have seen this stock has relatively shown some underperformance in the recent past, but on the closing chart, after a long period of time, the prices seem to be giving a breakout from a falling trendline resistance. From a positional perspective, I expect this stock to head higher towards 650, 650 kind of range. But if anyone is looking only from a BTST perspective, then go long at current levels of around 609, keep stop loss below 597, and expect target around 625 to 630 range in tomorrow's session.
Sachtanand, what about you, your closing strategy?
I think both the liquor stocks are looking good. In fact, United Spirits has just given a fresh breakout. 3440 is where it is quoting right now. 3400 should be the stop loss for the trade, and an extension towards 3530 could be seen very soon. So this is one. And if you look at United Breweries, recently we saw the stock breaking out of its multi-month resistance. So clearly, the trajectory looks open right up to 1340, and a stop loss can be placed somewhere close to 1258, and long positions can still be initiated in United Breweries.
Remember, United Breweries has been inching higher, and today is the 5th straight session, and we've also observed some long positions for the June futures of this one in the last 3 to 4 trading session. But these were the closing strategies. Let's get you some fundamental stock pick also going. Lancelot, any fundamental view that you have on any stock which can give good returns from these levels?
Yes, I think if one can look at MCX, the multi-commodity exchange, that could offer good appreciation over the next 12 to 18 months. And the reason being that the regulatory changes are all behind MCX now, and we are seeing the new regulations allow MCX to launch options, as well as allow new participants like banks and subsidiaries of banks to participate in the commodity exchange. Again, MCX is very strong in the metals commodity space and has a dominant position there. Almost 80 to 90% of the volumes on all metals come in on the MCX exchange. Over the last 2-3 quarters, we've seen MCX keep costs under control and actually reduce costs. And this gives it great operating leverage, because in an exchange, the expenses are almost fixed, and whenever volumes go up, the contribution will go down straight to the bottom line. So I think, given this background, we should see MCX, improving earnings by at least 20% year on year, and by FY20 they should end up with an earnings of about 33 rupees. The stock is trading at 20 times forward earnings, and if you look at it from a price to book value, it's about 2.8 times, which is fairly attractive when you compare it with all the global commodity exchanges. So I think this is more of a longer term investment, maybe between 12 to 18 months, but the downsides are very limited, and one can get maybe 25 to 30% upside from here.
You don't like a Bombay Stock Exchange over an MCX?
Well, I think the Bombay Stock Exchange is more focused on the equity trading, and in that space, the equity trading space, I think NSE dominates. Whereas in the commodity trading, especially the metal side, we've seen that MCX dominates. So while BSE appears to is cheap, it's also cheap because of the negatives that are looming around. Whereas MCX looks is cheaper in that sense, but has a lot of positive triggers going for it. So at this point in time, one should look at the positive triggers that are likely to play out over the next 24 months, rather than focusing purely on valuations and then looking at BSE.
Okay. So watch out for MCX as a pick is what Lancelot Dicana has to say. Lancelot, we'll leave it at that. Thank you so much for taking the time out and being with us today and giving us your thoughts. Appreciate your time. One final thought on a specific stock. The top two gainers, Lupin and Dr. Reddy's. If you had long positions here, Ruchit, would you carry home the longs?
Definitely, I would carry home the longs because Neeraj, if you see in last 3-4 trading sessions, the market momentum have been led by these pharmaceutical names, and the volumes are even high at current levels. Don't forget about the underperformance that these stocks have shown since last many months. So if the underperformance was significant, the pullback moves would also be significant. So I think even from current levels, these stocks have quite a good room to head on the higher side. So from a trading perspective, if already long, keep trailing stop losses and continue to hold the long portion, specifically on the 3 pharma names, that is Sun Pharma, Lupin and Dr. Reddy.
Okay, that's the call on the pharma stocks. But as we speak, Bank Nifty is almost at day's high, 0.7% gain seen there. And I guess stocks like ICICI Bank, which was trading in the negative territory, has seen some recovery in the intraday session. Look at that. ICICI Bank is now sitting with gains of almost 0.5%. But it's just 2.5 minutes to go for markets to close. So let's head across to Neeraj to find out how exactly today's closing is panning out. And Neeraj, 10,850 was the level from where index retreated yesterday. And finally, I think we'll be closing around that mark today.
Yeah, all's well that ends well, and today's been a remarkable pullback, courtesy what's happened in Singapore, to be honest. So one of the 3 global events has panned out in favor of the bulls. Let's put it that way. Let's see what tomorrow and day after bring about. But strong moves, ending close to not really the highs for the Nifty Bank, but still the last 1.5 hour highs for sure. And the mid caps and the small caps too haven't done too badly, I must add. About 0.67%, 0.89% for the mid cap index. So fairly decent performance by the mid cap space as well. But what about individual stocks? I'll bring up the large caps. Navneet will bring up what's happened across the board otherwise as well. Lupin 6% higher, strong move. Dr. Reddy, strong move. SBI 3.5% for SBI. That's a really strong move. IndusInd Bank about a couple of percentage points. HUL 2.5% higher as well in the session today. TCS and Reliance Industries, both of them have moved up 1.85% apiece. So good strong moves for both of these as well. And not too many losers. Bharti a couple of percentage points. Tata Steel continues to grind lower. As Navneet said, ICICI Bank has moved out of the list of the losers as well. iShares about 1.5% lower, but not enough losers. And I think that really sums up the day's trade. Some very strong gains for heavyweights. Pharma doing well and not enough losers means that we're ending about over 0.5% or 0.7% higher. The broader markets too, strong market breadth, Navneet.
That's right, Neeraj. It was a good day for both benchmarks as well as the broader market indices. So let me just highlight a few gainers first. A couple of the PSU stocks went up in last half an hour of trade from the likes of STC India, Dredging Corp, as well as MMTC. All these PSU stocks saw good gains, 14.5% higher for STC. Dredging Corp also closing around the day's high mark. And also MMTC, that too saw a sharp surge of almost 13%. Besides that, BGR Energy was locked in upper circuit on back of the news. It backed an order worth 431 crore, and that was the reason why you saw the stock being locked in upper circuit. Rolta and HCL Infosystems, these two stocks from the mid-cap ID pack were up and about, so 13% higher for Rolta. HCL Infosystem also saw good gains of nearly 12%. DCM Shriram was up and about as the company will be mulling share buyback on June 18. So ahead of that event, the stock saw some buying in today's trade, and also the entire pharma pack was up and about. So if you look at the top F&O gainer, it was Granules India which topped the list. Some fresh long positions were seen for Granules, and Tata Elxsi, fresh highs seen in today's session, and the open interest build-up was really significant. Even at these levels, the traders are taking long bets on Tata Elxsi. 4.5% high trade, closing the day around the highs of that level. And on the losing side, you had something like TCI Developers, not a very liquid counter, but it did fall nearly 7 to 7.5%. Apex Frozen Food was locked in lower circuit. Remember, this is a counter which has been going down after it came under the ASM list of the stock exchanges.
That's the picture at close. I want to start we'll get the indices up on the screen, but also bring up the advanced decline ratio. Really interested in seeing what's happened there. Yesterday, mind you, the market breadth was positive, but converged a little bit towards close. In today's session, it's actually very similar to yesterday's market breadth, just that it's opened out a little bit towards the close, but about 2:3 in favor of the advances. So fairly similar in the numbers in comparison to what happened in trade yesterday as well. So 2 strong days, Navneet, of positive market breadth that we've had.
And that's a very good sign, because when the broader markets go up, that's viewed as a positive sign for markets. And I think let's pull up the turnover list. Let's see turnover. What was that in today's session? So 6 lakh crore is not bad actually for the NSE turnover. It's above average of almost 5 or 5.5 lakh, which you see on daily basis. But I think the cash turnover has been just around that, range of 27 to 28,000 crore.
Yesterday too was about 26, 27,000. So the cash market volume certainly lower, but Navneet is right. The F&O volumes look fairly okay. The contributors list and then the global markets ones. Just want to put into perspective what the global markets are doing. Here we've established it's the heavyweights which are doing rather well. Infosys, well ahead of the 25 years of listing, is down about a couple of percent. I mean, actually not a couple of percentage points, just about 2 points really on Nifty. Hardly any moves there. But the global markets, Navneet, could be interesting. And let's just bring up what Europe is up to.
Surprising.
Yeah. Well, yesterday we corrected a bit despite the world markets doing really well.
Yeah.
In today's session, maybe they're just moving back to normalcy. The world market's certainly not doing all that well. But yeah, but surprising. I would have thought that the cues were positive from Singapore.
I think if you can just pull up the Dow futures too, that's going to give a good indication after that major event now which has taken place. So I think everything's now factored in by the markets as the event is out of the window. So 32 points lower for Dow futures.
Yeah, maybe all eyes out for what happens Wednesday night. Let's see what the Fed delivers. Anyways, final thoughts from both our experts. And Sachidana, let me come to you first. The world markets aren't looking all that positive. Say we have a flattish start tomorrow. What would you do to your existing long positions?
Neeraj, as we discussed, in a running trend, doji is not a healthy sign, and this is what we witnessed yesterday. Even today, markets did not, close above its previous swing high, which is around 10,550. So 10,850, 855, and that closing is very important to continue with our long positions. On the flip side, I think 10,770 is the level, a critical level or a trading stop loss for our longs, and probably in case if this particular level is breached, then the market should again drift down lower towards the 10,650, 10,630 kind of a zone. So as of now, the key level on the higher side remains at 10,855 on a closing basis, which will negate that doji formation, and the trend has been very firm so far. So I think the momentum will aggravate once we have a firm closing about 10,855, and an extension towards 10,940 will be very much evident. But on the lower side, 10,770 is the critical support and the trading stop loss for our longs.
Okay, Ruchit, what about you? How would you approach the trade tomorrow, considering there was a sharp recovery seen for Bank Nifty in last half an hour of trade owing to State Bank of India and ICICI Bank?
So I think whatever global markets are showing as of now, that is already discounted because the closing is quite firm. Even on the Bank Nifty index, we have seen that recently the rising trendline support has played its role quite well. I think as of now the trend continues to remain positive for our markets, so traders with long positions should continue to hold. Now the key levels which I would watch out on the higher side would be 10,920 to 930 range, because that is that level in which during mid-May we saw a significant selling pressure in the mid-cap stocks. So I think if any kind of profit booking would be seen in that range only, from 10,920 to 930. So existing longs I believe should be held on. One can look to book profits on their long positions when we approach that 10,920 to 930 range.
Okay, Sachidanand as well as Ruchit. Gentlemen, many thanks for joining in today and giving us your thoughts. Really appreciate your time, and all the best with the trading week ahead. Well, and with that, it's a wrap on this leg of Countdown from Navneet and me and the team that put this show together. Thank you so much for watching.